So to return to our theme tonight, will this be a barn burner of a recovery adjusting out for the G20? Well, we have Connecticut Senate candidate Peter Schiff. He's the author of Crash Proof 2.0. He is also a distinguished investment advisor. We also have our great friend Jeff Kleintop of LPL Financial. Jeff Kleintop, start with you. The leading indicators, we'll put the picture up on the board again, 5 consecutive months. The ratio of coincident to leading indicators or leading to coincident is doing very well. Is this going to be a barn burner, Jeff? And how much room does the stock market rally still have?
You can't deny the facts, Larry. You're right. We have seen an incredible turnaround in these measures of economic and market performance, whether it's the stock market, the credit markets. Clearly, in the leading indicators, you can see that upturn. In fact, in our own current conditions index, that began to turn up back in March. That's when we began to add risk back to the markets. We haven't pulled any of that off. So even though the market is now ahead of our year-end target estimate, which is around 1050 on the S&P 500, we see more gains to come on the back of higher earnings revisions, still pessimistic market sentiment, and a lot of cash on the sidelines.
Peter Schiff, if you would, put your financial hat on for a moment. We'll get to the politics in the next segment. I want to ask you to respond to Jeff Kleintop's optimism and my thought that we could be in, at least for the next year, year and a half, Peter, for a barn burner of a recovery.
Well, we might get a stock market rally. I don't think we're going to get an economic recovery. I mean, we might get, a positive print or two on GDP because we spent some more borrowed money. But we're making the economy worse, not better. But that doesn't mean stocks can't rally. I mean, I own a lot of stocks. I own them outside the United States where the rally is much stronger. And, of course, with the dollar weakening, that, intensifies the gains from an American perspective of what's happening on abroad. But I don't think that the stock market going up means the economy is turning around. The stock market dropped dramatically. I mean, so you're going to get a bounce. And when you're creating all this inflation, I mean, nominally, prices have to rise. But the real question is there any real gains that are going to be made adjusted for inflation by owning U.S. stocks? I don't think so.
Well, Jeff Kleintop, that's a good question. In real terms, will we get inflation-adjusted gains in the stock market? And I just want to pursue this, Jeff. I mean, a lot of prints, a lot of data, retail sales, business spending, factory orders, the ISM reports for manufacturing and so forth are all beating the street, Jeff Kleintop. Read into that for me. What can investors take away?
Yeah, all these numbers are not only exceeding expectations, Larry, they're actually good. I mean, they're actually solid numbers. This isn't just better or less worse. These are actually gains. Look at the housing numbers, industrial production, retail sales, all the stats you cited. The labor market's still weak, but it's improving at a fairly good clip. In fact, if that pace continues, we'll have job growth by the end of this year. But take a look at what this really means for corporate America. Earnings estimates have been rising steadily. In fact, they're up 40 cents just in the last couple of weeks as we look out to 2010. The stock market's only trading at 14 times 2010's, I would argue, conservative earnings expectations. That means there's still some more upside here based on real fundamental assessments of what companies are going to be able to produce in the next year.
Peter Schiff, there was a piece out by somebody, I don't know, that said, it might have been Barton Biggs, it might have been Byron Wien, I don't want to give false attribution, but the idea was that the economy is beating everyone's expectations so much, and so will profits, that, in fact, it's a good idea to buy even lower quality stocks, particularly small-cap stocks and mid-cap stocks. Now, what do you make of that?
Well, look, certainly you're going to get, when you have short covering rallies, I mean, you might have more shorts in the lower quality names than they could be covering. So if you want to gamble, yeah, sure, in a bear market rally, you could get a bigger move in those stocks. But I'd prefer to completely avoid the U.S. market. There's much better values abroad, and the economic fundamentals are better there. You don't have to worry about whether this is a bull market or a bear market rally. I think there are still legitimate bull markets outside the United States, and I would rather participate there.
Would you be selling Treasury bonds?
Well, I mean, I don't own any to sell, but if I had them, I would certainly be selling them.
And why would you sell them? Why would you sell them?
Well, because the government is undermining the value of the dollar. The dollar is going to lose a lot of value. All treasuries are promises to be paid dollars in the future. Well, the dollar is going to lose a lot of value in the future, so why would you want to own, a receipt for dollars? I mean, you might as well even be, I'd rather be in U.S. stocks than treasuries. Fortunately, those aren't my only choices.
Jeff Kleintop on the way out. As an optimist about the stock market, I want to ask you what could go wrong. What is your biggest fear?
You know, there are several, Larry, but to narrow them down, protectionism has got to be the #1 concern. And, of course, reflation. If policymakers make some mistakes next year and inflation gets out of control, that is the biggest enemy to an investor.
How long, in view of those concerns, how long can this rally go? In other words, we're coming into the fourth quarter of 2009. So if it gets pushed into 2010, when would you sell? When would you contemplate selling? Or does such a thought not cross your mind?
You know, there are certainly levels at which maybe 1,200 on the S&P where we might get cautious given what we know now. But listen, it's the middle of 2010 where the Fed needs to make a decision about its balance sheet. And that's going to be discounted ahead of time, maybe 3 months or so. So we'll need to see how well the Fed is managing. Forget the G20. It's the Fed that matters here. Let's see how well they're managing their exit strategy. That'll determine whether this rally's capped.
All right, thanks ever so much, Jeff Kleintop. Coming up, Peter Schiff and I are going to talk about politics. Peter has thrown his hat into the ring for the Connecticut Senate race. He'll have a Republican primary, and he may then get a chance to go after incumbent Christopher Dodd. We'll talk about it after the break. We are the Kudlow Report, a barn burner recovery. Check out the index of leading indicators. That's our big theme this evening.